Good morning, everyone. Welcome to this webinar, Extending Your Financial Planning Process with a Modern Planning and Reporting Solution. My name is Inge André Kristiansen. I work as a principal consultant in Lumi, Norway. And today we will talk about how a comprehensive financial planning solution can show how and ensure that the business can deal with the growing stakeholder demands. And as we see an ever-increasing budgeting and forecasting challenges. So in this webinar, we'll illustrate how Oracle Planning and Reporting Cloud can speed up your planning process with accuracy and management trust. The webinar will last for 45 minutes, and questions will be taken after the demo. So this is the brief agenda that we will go through. Introduction to Inlumi and Oracle, some of our customers, and the suggested solution that just mentioned, Oracle EPM Cloud, and the demo, and Q&A at the end. So please raise hands and ask questions along the way, and as mentioned, we will take them at the end. So please attend as much as possible so we can have a good discussion at the end. So who are Inlumi, meaning us, and Oracle? Well, Inlumi first. Inlumi is one of the largest players in the field of enterprise performance management, an acronym defined by Gartner. And what does that basically mean from our perspective is that we deliver tools needed for Office of Finance, which involves group consolidation, reporting, and financial analysis. The topic of today is financial planning and simulation. But we also deliver areas within KPI-based dashboard and analytics that often combines information from various data sources as ERP, CRM, HR, all the source system that you have that is very often needed to get your group consolidation or financial planning completed. Also within account reconciliation and transaction matching, which is also part of Office of Finance, we work within, and regulatory requirements as IFRS 16, but also the narrative reporting part, which involves quarterly management reporting or year-end reportings, as well as country by country. So where is Inlumi located? As mentioned, we are the biggest player in Northern Europe. We have presence in 6 countries, 7 offices, and we have a huge staff which is divided into specific domains, meaning our area of expertise, which is financial close, financial planning, but also integration and infrastructure, and what we call managed services is installed application where we administer and take care of the system. Today we will talk about the cloud, so not relevant, but we cover A to Z when it comes to EPM, so that's our focus as well. So from a high-level perspective, how does it look within Office for Finance within Oracle EPM Cloud? From the lower end here, we see that to complete a financial planning process, we often utilize data sources, meaning we can use GL, meaning trial balance from your ledger, or CRM data or HR data to complete your salary and social planning costs, or production data that could be in help when it comes to planning volumes, for instance, where we import this way up to the planning solution and utilize Actual as a part of your planning and forecasting solution. So if we take it a bit step further and go upwards, we have Of course, Excel or Office, Microsoft Office, which is the tool to use. Controllers love Excel, we also do, but we combine Excel and the Office tools itself with the help of a planning solution, and that combines, as mentioned, historically data, which is needed for your financial planning process. As you see, we will focus in this demo on financial planning, but we will also later in webinars, the 5th of April, we will also take a look into financial consolidation. The different boxes here, it just shows different, let's say, models that solves different needs. For instance, you could have financial planning and look at spend analysis, or you could look at it from a profitability perspective. So ultimately, this tool covers A to Z, from data sources to reporting, and it helps you in this very changing climate when it comes to the marketplace we live in. So the main goal here is to be agile, have swift processes to complete efficient planning processes. So that brings us over to setting the scene. How do we see that our clients work, and what do they face when it comes to challenges? We often see that spreadsheet is a tool that is very good, but it has some limitations when it comes to scaling, and it often requires long planning cycles because it involves a lot of spreadsheets. We had clients with 130 spreadsheets on the base entity levels, and they needed to consolidate everything and to adjust that planning process. It took 6 months, which is fine, but it just shows that it is a challenge to comprehend everything. And the data integrity and quality is also a part of that, of course. It also involves the flexibility part. And what we will talk about, or what I will show you later on in the demo, is that we would like to spend more time on data and just do the analysis for it, not gathering, so to speak. And the different processes. We talk about actual, forecast, budget, rolling forecast, estimates, targets, strategic long plans. It's difficult to mix all these financial planning processes in Excel. So that brings us over to how can a centralized solution help you with this? Well, the purpose of the demo is that we will go through and show many of these, but in short, it helps you have one version of the truth. Basically, the data is one thing, but also the calculation logic. What calculates in the model calculates always correctly, and if you need to adjust it, it is relevant everywhere. So if you buy a new entity, that logic that is already there is relevant for the new entity that you have in your company. So it's applicable logic and easy to add new processes. And as mentioned on the left side, go from simple data gathering to integrated consolidation and business planning, and spend time on analysis. Sure, it's what we all need, but difficult to achieve. And most importantly, we love Excel, as mentioned, and having a connected platform and solution from an EPM perspective that works closely with Microsoft Office is absolutely necessary So that's something I will also show in the demo. So this shows some typical use cases from a financial planning perspective. There are many use cases, but I have just taken out 3. And the one that is in the red quadrant there is what we will show in the demo. We will focus on forecast process with a full P&L, which is ultimately driven by drivers on revenue, where volume and price is the underlying drivers, but also indirect cost drivers within total cost of sales. We will also show a use case where you want to simulate what happens if something happens. So also mentioning typically use case, you want a budget on salaries. You can import your HR data, meaning you can implement by employee or by group, and we can build up a use case where you basically get your salary and social cost. And it also very typical to have shared services costs that allocates out to the different entities. So having transfer pricing, etc., is typically what we can do here, or other allocations, that is from a central perspective, or production planning, which combines one or the two. So that brings us into a demo perspective. So what I will do now, that was a very brief intro, but before I go in there, Oracle, we are a partner of Oracle, and we have worked together closely, as mentioned, the last 15 years. So we are a consultancy company and implement Oracle's products together with Oracle. So then I will go into the demo. So what you see here now is that I'm logged in as Maria. Just to set the overall scene here as well, Maria is working in a company where she's responsible for a group of products. She wants to complete the Q3 2017 rolling forecast process, and the company use 18 months rolling forecast, meaning they go in every month and they complete 18 months rolling. And Maria, she is responsible for the volume and the price planning, as well as the total cost of sales within the telecom area, which I will show now as a demo case. And she would like also to have insights in what happens nowadays, because there are so many market challenges for her as an owner of the telecom products, meaning mobile services. So she would like to go through and complete the Q3 forecast and look at a final P&L, and also look at the reporting and do some what-if analysis. That is her role. What do we see here? Well, this is the interface where everyone logs in. All the different areas here are grouped by roles, meaning Maria has access to revenue and expense from what I mentioned, but different people have different access, meaning that everything is customized to the role and the responsibility and access rights. So it's all about having a tailored access to what you need to see and what you want to focus on. So you can also see here that she has access to approval flow. So when Maria has done her Q3 forecasts for 2017, she can or she must finalize and send her Q3 forecast to the boss of her. So that's basically her responsibility. So let us now go into the revenue part. I will focus in this demo on the revenue part only, but the expense process is the same that I will show now. So if I go into revenue, what does Maria see? So I will go to the upper left corner here. She has 3 access points here that basically shows her a process flow, task, or similar. Look at the reports, and down here you have the rolling forecast and the report. So these are the icons that I will go through. So now I'm on the overview, and she has 2 reports. If we go down, we see what we call dimensions, but it's basically a separation of the chart of accounts and additional information. So version, it could be working version, final version, sandbox version. I will get back to that. But so to have one version of the truth and additional ones, it's split by version. Currency, in this case, Mariana is working in dollars, and her entity of responsibility is the entity called Sales US. She can easily navigate in here because she has access to the whole entity structure. So here we can see total entity grouped into regions, and further down to the entity at the lowest level, which is the one that I will focus on, and that's also Maria's responsibility, where all the sales and total cost of sales is done. So what do we see further down here in this dashboard? We can see that we have an actual already reported. We are now in June 2017. That's the final figures that have been uploaded and reported. And we can see that the gross profit is 149 million. And the last 12 months, TTM, total 12 months, is summarized and shown here. And we can also see that we have some trends. As mentioned, we have 2 periods here of historical data, and she will go through and do the forecast for the next 18 months, meaning 6 months out to 2017 and the next 12 months out here. So we have an overview where we can see that we need to go a bit more in detail to actually look at what the status is. So I look here just to have a different view of the expense trend. It's slightly stable, and the revenue trend is seasonal. And we can now go into a process where I want to look at my data and actually work with them. So remember what I said about, okay, doing more with looking into the data instead of using time on data gathering. Here, the data is already populated. And we can see down here that something is going on in January, where actually total cost of sales is actually going towards total revenue. So very small margin, it seems here. So something is going on, and we have to look into that. But what do we see here? If we go up again, we are on the same entity. We are in the working version in US dollar, and we are on smartphone, since Maria she has responsibility of these products. It could be any, but in this case, it's smartphones. And it also is divided into markets. It could be segments or similar, but this is just how it is for her. And what we see down here is drivers. We have loaded, as mentioned in production data, for all the products that we do the forecast or the budget against, but in this case, it's rolling forecast. And we have drivers that can be used for populating forecast figures. So we can use the current year actual average, or we can use the current month, meaning June 2017, or we can use prior year or forecast with seasonality, or as we see here, prior year actual with seasonality. So what does this give you? Well, it gives the user an option to actually use the historical data and populate the future. So if we go into a bit more detail here, we see that the Q3, Q4 is the 6 months, and the next 12 months, this is the forecast that will be populated. What we see here is what's being loaded of the different drivers. So we see that for the product smartphone, for the market US, for this entity, we have loaded data, and we show it here for the last 2 periods to just have insight what the actual was. So we had 8,863 in the last reported month. And how is that being done? We see that, okay, we can increase or decrease. So if we then say, okay, I want to have an increase in the volume. If I go up at the upper right corner here and save, we will see that the data will be updated with a forecast that reflects the last reported month. Meaning, I drill down and just see that, just to show that this is the last, these are the figures that are being used for the volume going ahead. But is this smart? Well, probably not, because we want to have seasonality. So I would like to use actual adjusted by season and use that as a base for my forecast instead of using just actuals. So then, instead of using time on entering data, I use drivers that look historically wise and spread them onwards. So this is very powerful and difficult to achieve in Excel because I have a lot of flexibility. And what we see down here immediately is that the revenue reflects as the season was historically. And this also applies for the selling price. And if we want to, this is just an increase, a decrease option, which is or can be used. So here we have the revenue part, and we also have indirect drivers that drives total cost of sales. As we can see here, some is defined as percentages or hard direct entry, meaning what is the direct labor cost, what is the material unit cost for this product, and historically wise it was 39, and here we see an increase based on the prior year actual seasonality. So probably, okay, it can be discussed here in business reviews. Okay, what is the trend? Why is the direct labor per unit cost, why is it increasing? Well, probably we could discuss, we could lower it. So we could say we want to increase it by 5, decrease it, oh, sorry, this was wrong, let's go there, decrease it by 5. And what I expect now is that will go down by 5. So 10%, let's say that. There we are. So actually, I want to decrease. Sorry for that. But if we go forward and look at the driver adjustments, because now we see that we still have a challenge here by why is this here happening? So this is the driver-based planning on the rolling forecast process for Q3 2017. She can work with the drivers, but she can also adjust them as if she wants to. So let's go onwards and take a look at that. And here we can see that these are the calculated volumes that was given in the forecast in this page, with the selling price and the percentage and so forth. But here we can see that for the 2018 forecasts, Maria anticipate a huge campaign which will hopefully increase the number of sold products, meaning this by 20,000. And in addition, we can see that it's a reduce in cost. So here is something strange. Material unit costs, why on earth is it increased by the double? Is there a change in the market where our suppliers increase our costs by the double? That could be the case, but then we need some actions on it. So then we can start discussing how and why and what can we do about it. Do we need to do something else? So these areas here shows impact instantly what the market can, how the market can influence us as a company. So we just have to live with that, but we also need to discuss how can we actually, what options do we have? So that's fine. Let's go onwards and look at the revenue part, because now we have seen that we have a calculated revenue, which is price times volumes, and we have some service revenue, which is related to the product revenue. And we also have other indirect costs, which is basically adjustment to the revenue, and we have the total cost of sales down here. So we see that for 2018, we have something from a P&L perspective on this specific product within this market for that entity. We see that, oh, the rest of the year we are fine, but the next 12 months in 2018, we are soon losing money within this product. So it could be the case that, well, the manager or the CFO says, okay, you really need to speed up and say this, we need 5 million more in revenue. So we can say that. And we increase our margin in 2018. Let's go onwards and take a look at the total revenue. We have an actual statement and a rolling forecast statement. These are the 5 millions. And the 5 million adjusted is something that we need to look into. But for the reporting now, I will go into management reporting, where I will run the report on 2018 on the rolling forecasts for the given entity for the US market. We are focusing on this product, but I could look at all products. And we see that the EBITDA is the figure already shown, 5.48 million. So how can this be utilized? Well, for the users out there, I want to have great reports and I want to send it to my boss. So I just download it and open it directly. And I can see that I have a report that shows here in PDF. And here is the 5 million for that product for this entity. And this can be adjusted. And here we see that here is the other product, which Maria has done. So it just shows how you can easily adjust the data and report on it and send it to your stakeholders with the trust in the numbers. So let's go onwards and take the modeling part, because I would like to look into a what-if scenario. What we see here is that we are on the rolling forecast, we are on the smartphone product, but I would like to simulate. So let me create a what-if version. I would like to create it recession, because the market, everyone is expecting a financial crisis, for instance, or other scenarios can be added, but I will just take one as an example, recession. And what we see here now that the graphs will update with the scenario what if, and the baseline is the same. So if I go back and look at the driver-based revenue, and I can then adjust on the working version, but I would like to change it to what if, and take this one here, okay, and update it. So now in the same version with the same data set, I can sit in the management business review and we can discuss, okay, you want me to achieve this, and we can work with the data without touching the previously delivered forecasts, which is extremely powerful. So we agree that, well, can't do, we have to remove it. So we are back at the gross profit at 1.7, and we can do the same discussion points with the drivers, but I will not go through that now, but I could sit in the meeting on the fly, discuss, okay, what if, what can we do? Can we do something with the price? How can we increase the volume? Is it something, what can we do with the material unit costs? It has extremely increased the last year. So what can we do? We have 241. This is killing us. We have to do something. What can we do? So we can sit and simulate. So this concludes the area within playing with drivers, getting a P&L result, looking at what if. I will, from a reporting standpoint, also have a look at how this looks. So I will just roll up my income statement, and then I will look at the bottom P&L, and I can see that I have actuals reported 2017. I have the budget scenario. I have actual versus budget. I have my delivered forecast, but I also can report on my recession scenario. which is extremely powerful. So this, I hope this gives you some idea on how you can utilize actuals with drivers and simulation, and from a discussion point of view. Instead of looking at only data inputs, we are actually talking about analysis within one process, and it could be, and it will be the same for budget or whatever process you're working with. So let me jump directly into what we all love from a spreadsheet perspective. We need to work with Excel because we know we like it. We see here that we have smartphone as the product, and the entity is sales, and we are in the recession scenario, so we can still continue work there. And I have to just update on the upper left corner here, and we see the 1.743 already updated, extremely powerful. So my message here is that we can easily have insight in the numbers from the web or the spreadsheets. And I will take the last 2 minutes just showing drag and drop and analysis, because if you have a report, I don't want to look at it that way, what can we do? This is a report which is available for everyone. Up in the left corner, analysis. And what that does is it brings you over in Excel Pivot, basically, but you are connected to planning. So let me just focus on 2018. So I can go and take 18, keep only here, which means, I'm going to work with 2018. I'm going to only work on 1 month, keep only, bringing me into one P&L statements. I will only focus on net income basics. And what I will do, I would like to look at all the products. So I just drag them down and release them. And what I would like to do is I would like to zoom in on all the products, and I would like to pivot that up in the row. So I just pivot. And this is the net income for all the products within my entity for the rolling forecast recession scenario. So that concludes a high-level demo of how you can utilize actuals data and complete your planning process. In this case, Maria is responsible for the rolling forecast scenario and process, but it applies for all the processes that is applicable for the company. So that brings me into the Q&A part. So any questions from the people attending? Well, the question which is coming here is, the data submitted in Excel automatically updated in EPBCS? Yes. All the data that is submitted is shown instantly, same place. So I can show you. I can go in here and say that now we are adjusting the calculated revenue, and I will enter 10 million. Or that was 1, but let's take 10 and submit. And you see that the adjusted figures is 54. And if I go back here and look at the the figures on driver-based revenue, the figure is here. So it's 1-to-1. So the answer is yes.